Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello, and thanks for joining us on another episode of Investor Financing Podcast. And this is your host, Beau Eckstein. Thanks for joining in, and I appreciate you listening and following us on our podcast station, wherever you're listening or watching from. Today is going to be a short episode, and we're going to talk about the capital stack. We're going to talk about the advantages of working with a broker that's got multiple channels to place your debt and equity needs, and what to look for and what's available today and what's kind of going on in the marketplace. Just a really kind of an update type episode. So what am I seeing? I'm seeing a big surgence in government type lending. So, or government insured type lending. SBA is just booming right now. They're just super busy. They've picked up a lot of the owner user type commercial properties. So if somebody's occupying 51% of the property, running a business out of the property, SBA 7A or sometimes the 504 is a good fit for that. I just got a loan commitment on a assisted living facility ground up construction, and it was big loan. It was over $11 million. And it had basically a SBA 7A pari passu with a conventional loan. So those two pieces, so the SBA 7A loan could only do a max of $5 million. So the other loan was $6 million and change. They actually, same banks funding it. They're a direct SBA lender. I was able to place that and just got the commitment. So we should be going to closing on that in the next 2 to 3 weeks, which is very exciting. I've got a couple other projects in my pipeline that are very, very similar for the same developers. I'm working on a very large bridge loan, which is going to be a little bit of construction. We're going to be doing infrastructure, and that would be, if I close this loan, it'd be the biggest loan I've closed to date. So really just have loans coming all over in all different areas throughout the nation right now, from the East Coast to the West Coast and in between. What else am I seeing? I'm seeing a lot of multifamily deals, a lot of bridge deals, and the market in general. I mean, lenders are a little bit more cautious on certain asset classes, obviously, especially hospitality, hotels. They're a little bit more challenging. I'm working on several hotel loans right now, and there's still an appetite. Just a lot of the other, a lot of the lenders are out of the game right now, but there's always lenders to fund the deals. That's kind of what I want to talk about, is that, what I do, on a daily basis is build relationships with different credit unions and banks. And because really what we look at, every deal is different. The sponsorship's different. The net worth of the borrower or sponsor is different, right? So I got to take in the information from our initial call and figure out where to place the loan based on the location. Is it a stabilized property? Is it needing a big CapEx budget, needs a lot of rehab? So we basically take that in and we figure out, based on all those scenarios, all those different inputs, where to place the loan. And it could be a bank, it could be a credit union, it could be agency debt, it could be HUD debt. And a lot of times on our development deals, we have to layer in different pieces of the capital stack, right? So sometimes it's a senior debt, maybe it's a bank piece, but they want to get higher leverage than 65 or 70% loan to cost. And that's where we bring in, there's different options. There's pref equity, there's mezz lending, there's PACE that you can infuse into the capital stack. There's tax credits. There's all different things you can do to create higher leverage and create a better return for your investors. And that's kind of the goal of putting together a good capital stack. And what I'm finding now as I dive deeper and deeper into PACE, I've got a couple deals in my pipeline right now that I'm sizing up. And what I'm finding is now PACE has just been around since the early 2000s, and it's evolving. It's evolving, and I believe that over the next 5 years, it's going to be 10x what they're doing in loan volume right now. But if you're a developer or a real estate investor, you need to learn about PACE. Depending on where the property is, there's different legislation. So some cities, it's hard to get done. Some cities are pro. California is obviously pro. That's where PACE really started from. So being able to layer in the PACE component of it, basically PACE can infuse anywhere from 5 to 20% in the capital stack. So that's a significant number. So you might, for example, get 65% of costs from bank, and then instead of getting pref equity or mezz, you can then potentially use PACE. And PACE really covers kind of the energy efficient piece of the construction budget. So it's a really ideal situation. It's longer term, it's non-recourse. And a lot of the projects I'm working on right now, I'm sizing up with PACE for the fact that it's giving higher leverage, non-recourse, and that's what developers want, right? They want the highest leverage possible, right? Typically. So knowing all these pieces and having the relationships is essential, and that's really what I'm really focused on going forward is this is still a relationship business. And so knowing all these bankers and credit unions, they have different appetites, and sometimes they're more aggressive on certain products, and sometimes they're not, depending on the market cycle. So knowing the appetite of these different lenders and having good relationships with the internal bankers is crucial to getting projects done. And
you're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
I'm really excited for what's going on right now. I'm putting together pieces on a lot of different things. So, I have direct relationships. I also broker some deals when it makes sense to broker. I have private investors. I have agency debt platforms. I have direct with HUD. So that's all evolving for me. So I'm feeling that I can provide a lot more value. I'm kind of going on a rant with this, but I just want to kind of give you the background of what's available for you as an investor. And when you're going out there to borrow and put together deals, it's really essential to know what's available based on that property type, based on that location. Is there tax credits available? And the more you know, just like myself, as on the loan side, is putting this together, a good lender can help you figure out how to get this thing done in the most efficient way, right? Because at the end of the day, if you can ROI, if you can get cheaper cost of funds and higher leverage, and you bring in less LP money, right? If you're doing a syndication or a partnership and you're bringing in, you have to raise more money, that usually dilutes the returns for everybody. So, if you're able to structure the financing right from the beginning, you can get way higher returns. So that's kind of a nugget for everybody listening to think about, right? Like, your investors, obviously, if you had to raise 5 million versus 2.5 million, it's often easier and better to raise 2.5 million. Now, there's certain projects that it makes more sense to raise more equity in the capital stack, but not always. Typically, it's usually more advantageous to have higher leverage from a bank or that part of the capital stack. But there's always those outlying loan requests that it makes sense to just be low leverage as opposed to higher leverage. So, but that's kind of what I really wanted to dive into, and just open up your mind. There's a lot of ways to finance things, and also with PACE, you're able to, let's say you built a property, you have a 3-year look back where you can actually recoup some of your costs without having to refinance your senior lender. Now, the big thing with PACE is that you have to have a lender consent, meaning the senior lender has to approve your PACE assessment loan, as you will. So, but if they're on board with it, then you can simply, without having to refinance the property, you can look at PACE. So you could go in and recoup some of your investment back out, right? Some of that equity could come with the PACE assessment. So that's huge. And also for all these older buildings, right? All these buildings that need to be retrofitted with a new roof, solar, new windows, energy efficient products, you can use PACE for that, and you don't necessarily need to pay off your senior lender. So that's also just a huge reason why PACE is really growing the way it is that you're able to use retrofits and use this PACE financing for that. And you're talking about typically terms anywhere from 15 to 30 years. And that's all dependent on the jurisdiction. So the local area has certain rules, and that kind of determines what the term of the loan is going to be, and then also what is the max you can essentially borrow, right, based on those line item budgets or in the construction that are energy efficient. So that's based on location really, and then obviously what in your construction budget. Some areas allow for you to use foundation, some don't. So there's certain caveats, but we have a professional team that's could help you, walk you through that whole process there. But PACE is huge. I'm an advocate, and I believe that it's going to be 10x what it is right now as far as borrowers and sponsors using PACE in the capital stack in the future. And the nice thing is if you're able to build something, and then you can actually do the look back where you can then recoup some of your costs after you get certificate of occupancy. So this could be a year later, and then you can maybe pay off some of your investors. So there's a lot of ways to do that. I mean, PACE is huge in hospitality, hotels, and now about 50% seems like are going into development of multifamily. A lot of PACE is going into multifamily right now, but you can use it on industrial. A lot of different asset classes that see PACE is available for you. So just want to kind of drop those nuggets on that. I'm diving deep on a bunch of projects right now, trying to bring PACE in where it's deemed viable for a bunch of projects. So just knowing the different elements in a capital stack, and when it all comes down, higher leverage, non-recourse, less expensive cost of funds. There's a lot of benefits, a lot of benefits. So keep your eyes and ears open, and feel free to reach out and run scenarios by me. I'm here to help. I'm always learning every day. I'm researching and learning something new. I'm building relationships with different lenders and family offices right now, because I think that's essential. And what I'm finding right now is there's a lot of credit unions that are balance sheet lenders, and they're fitting a lot of the multifamily deals better, just because agency debt right now in certain markets, if it's a tertiary market, they're being a lot more critical. So sometimes it's better for bank or credit union versus maybe a small balance Freddie or Fannie loan. So knowing all this stuff, that's essentially what I do all day is figure out how to put loans together, how to put the pieces of the capital stack together and make these deals work. And really excited to do more SBA. SBA is really dynamite. I mean, it's just, if the project qualifies for it, right now you can, on construction, you can get really high leverage as opposed to going to a bank. And that's pretty much what I wanted to talk about today. I know I kind of rambled on, but I feel like I need to ramble on sometimes to talk to just what's on my mind, and hopefully this is valuable to some of you listening. In addition, I'm rolling out loanbrokerlive.com, which is going to be a platform for loan brokers like myself, and we're bringing in different lenders to speak on their appetite for lending, their underwriting processes, and so forth. So if you're a lender listening to this, feel free to get on the email list at loanbrokerlive.com. Please subscribe to my podcast here at investorfinancingpodcast.com. If you have any loan scenarios, feel free to reach out to me. You can go to investorfinancingpodcast.com. Other than that, I'm working out of the house like most of us, and fortunately here in Nevada the gyms are open, so I'm getting outside and going to the gym. I'm being careful. I'm wearing a mask. I'm cleaning the equipment. I'm staying away from people. But I just need to get out of the house, get to the gym. So whether you're working out outside or at the house or whatever you're doing, I hope you're staying safe and you're enjoying your time at home and with your family and friends, and as best as you can. And at some point, hopefully soon, the world will open back up. But I know for one thing is that right now there's a lot of changes in the marketplace, a lot of businesses going under, a lot of businesses thriving. So I'm watching, I'm seeing what the trends are. And but at the end of the day, you buy real estate for a long time, buy cash flowing assets, and you'll be okay. Anyways, I'll see you on the next episode. Appreciate you listening and following us. Thank you.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.